Hi there. This is another edition of The Interview with me, Hiten Samtani. Today I have with me Max Simkoff, who's the co-founder or the founder and CEO of States Title. It is a startup that is looking to use machine learning and big data to kind of overhaul the residential closing process, which for my money and a lot of people in the industry feel that this is the most antiquated corner of the industry. It's one of the most opaque corners of the industry. So Max has come along, and his company is trying to poke some holes in that model. So States Title, which is his firm, just raised $123 million in venture funding, and we're going to talk about his plans for that money, his plans and vision for the business, and what he thinks about the residential closing process overall. Max, welcome. Thank you for being with The Real Deal.
Thanks, Hiten.
So this is an interesting time to have raised this money. Did your value proposition become even more urgent during something like this?
It did. Yeah. I mean, I think the way that I describe it is we've gone from pushing a vision on a lot of the industry for the last several years. Mm-hmm. That vision being that there's too much friction, there's too much frustration. Like you mentioned, there's too much opacity in the process of closing a mortgage, which is managed primarily by title companies. Mm-hmm. And with all of the modern day technology that exists and with all of the other places that consumers expect instant experiences, getting a ride on demand, watching streaming content on any device at any time, having groceries delivered in 2 hours or less, it seemed, somewhat ridiculous that there was still this mountain of paperwork and process to get your residential real estate transaction closed. What's happened because the recent market has become more of a pull. 10 years ago, 15 years ago, if you talked about the 4 or 5 pain points in a residential real estate transaction holistically, from most people who are either buying or refinancing a home, they probably would have told you things like just finding a home or selling your home, right? That was painful, right? Having to find a realtor through a referral network or having to find a lender, just getting a mortgage was painful. What's changed from then to now is that all of the remaining biggest pain points are in the closing piece because that other stuff mostly got solved, right?
You can find a home on Zillow or StreetEasy. You can figure all of that stuff out.
You got it. Yeah, you can make it. I mean, you can find a home on Redfin and then you can make an offer for that home right from Redfin, right? Like even that part of the process is just kind of fascinating. Is like Redfin can provide you value-added information to help you make an instantaneous offer. You can get pre-qualified for a mortgage through, the point of sale applications that these mortgage lenders use. So the pain points I'll focus on are mostly, I'll give you the biggest 4 or 5 in closing. First, which is really the first problem we solved when we launched our business in late 2016, early 2017, is the title insurance piece itself, which is super opaque. Mm-hmm. What gave me reason to launch this business was my own personal experience in trying to understand it. I was closing a residential real estate transaction. I asked a series of questions about title insurance, and it's almost like with every answer I got, the less I understood the rationale for it and the more uncomfortable I felt about what value what there really was, right? I was like, well, what is this title insurance thing I'm paying for? Well, that makes sure that you have clear ownership of the property. Mm-hmm. Well, okay, like didn't the person who owned this home before me buy that product? Yes, of course, they bought it too. Okay, well, so I'm really only establishing clear ownership from when they took ownership to now, right? Which is a relatively short period of time. Yeah, that's right. Okay, so I should probably pay less for that because there should be less risk. No, that's not how this works. Like you actually pay more because it's not priced on risk, it's priced on property value.
The rates are, at least in New York, the rates are set by this organizing committee, which is made up of the 4 or 5 biggest players, which in any other world would be called a cartel.
I mean, look, there's various ways of setting rates in this industry. I think it's safe to say that the various ways that have been historically utilized have generally resulted in rates going up, not down, over time. And that struck us, again, as a little odd because it's not like the risk in many of these transactions has also gone up, right? It's not like, buying homeowners insurance for larger homes in Southeast Florida, like rates go up over time because they need safer construction materials and they have to withstand hurricanes and the hurricanes have gotten more severe. Like that makes sense. It's like, yeah, you just got it. You want to live, on the beach in South Florida, you should pay a higher homeowner insurance premium. Why you should pay a higher premium for residential refinance title insurance on a home that's been refied 3 times in the last 10 years, where the only thing that's changed is the value of the property went up, that doesn't, to us, that didn't hold a whole lot of water. The second pain point was the actual closing process. So like just figure out like where and when you're going to close and how you're going to sign your docs, and it has to be in person and it can't be on like that. Again, most people just learn to accept this pain. Most stakeholders in our industry, real estate agents, loan officers at lenders, borrowers, buyers and sellers, like it's like a necessary evil. They're like, okay, like I got to go to a title company office and I got to sign them.
Is it a necessary evil, or is it the ingrained ecosystem? Because everyone is kind of wetting their beak a little bit, right? The brokers benefit, developers benefit. Everyone is kind of has skin in the game in a sense.
There's some regional differences that are important. We don't currently operate in New York. We're trying to.
Right.
New York, and this has been well documented by you guys and the New York Times and a number of other people, like New York's market does behave quite differently than much of the rest of the country, and they do all the things that you just mentioned.
Right.
And I would say to a lesser extent, even in, even in places outside of New York, like there's a lot of what the industry has traditionally referred to as junk fees. And just think about that for a second. Like if that's an industry term, oh yeah, those are the junk fees. It's like, what is a junk fee? And why are people paying for junk? Mm-hmm. Like why would we keep using language like that? It calls attention to the fact it's like, oh, that's like a pass-through fee that we don't make money on, right? By and large. But it's like what are some of them, like a
necessary evil type of situation.
Yeah, but they're like, it's like, a convenience fee or a document shipping fee or a document prep fee. It's like, what? First of all, again, this is the point, and it's kind of getting back to this like pain point of like, why are documents being prepped? Mm-hmm. Like, why in this day and age? Nowadays, like we just completed this financing, $123 million financing. There were a number of documents that got forwarded to me because things were happening, relatively quickly, and lots of legal documents that need to get signed, and various law firms. People would forward things to me. Maybe every fifth document I would get from a law firm would be a PDF, and they'd be like, "Hey, can you sign this?" Right? And my response was always the same. I was like, "Put it in DocuSign."
Yeah.
Like I don't print PDFs and sign them anymore because it's stupid. And then the last pain point, so I'll give you the three, is just like the sheer amount of fees and information around money that needs to happen so that a relatively complex transaction can get cleared. Like at the end, like let's just say you've signed your docs, right? Uh-huh. And let's hope you signed them correctly. And let's hope that, by the way, you might have signed them in blue ink in the jurisdiction where that's required for them to be properly recorded, not black when a notary made a mistake and had you sign it with a black ink pen, which means those documents need to be reprepped, shipped back to another notary, back out to your house for another hour of signing, okay? Let's assume you did all that correctly. There's so much financial information now in paper documents that's getting keyed and rekeyed, and errors are happening as transfer taxes are being paid and mortgages are being paid off.
But did you grow up in Portland? Is that right?
I did, yeah.
How close are you, by the way, to the wild country ranch and all of that?
I grew up fishing a lot in Central Oregon, on the Deschutes River, mostly. But we took a couple camping trips where we actually camped one time right next to the
ashram, the Osho ashram.
Yeah, my dad would mess around with me a lot. He's like, hey, you want to hear something crazy? He's like, that land right there, like 10 years ago, there was this, like a massive movement, Rajneeshis,
Yeah, that's right.
Basically like created a compound there, and their leader had like a fleet of Rolls Royces, and he built like a landing strip for a private jet. And at the time I was like, I was just like, that's ridiculous.
In a way, you're taking on a very powerful, very well organized cult. And so I'm wondering, when you came into this, what sort of resistance and pushback did you get from the powers that be?
There's a quote that's been, I think, has been misattributed to Gandhi, but there's some quote that basically says, first they ignore you, then they laugh at you, then they fight you, right? And that's pretty much been our experience with the title insurance industry, right? When we came to market with our original product in early 2018, which was an instant underwritten refinance title insurance policy, most of their reaction was just like, it's like, who cares? First, and remember, you got to put yourself in the mindset of like early 2018, interest rates had already been at record lows for the 5-6 years leading up to that point. So most of them are like, nobody cares about refi right now. Everyone's on purchase. This is a one-trick pony. They're not going to get traction. And by the way, like, it's expensive to start a title insurance carrier, full stack. Like, do you have to raise
a very, very serious amount of money, right? I guess that's a capital intensive business.
Exactly. And so the reaction is, was like, just they ignored us. They're like, that's not a thing. Nobody cares. Not interesting.
You're not coming from one of those backgrounds where, you're not a real estate person as such.
Exactly. And there were teams of people from the title industry who had tried to launch new title insurance carriers actually in California, and they'd failed. Like, they'd taken a couple years, they couldn't get it launched. And so they were just like, if they couldn't do it, these jokers who have no title experience, they have no real estate experience, they're not going to get there. I think where it got a lot heavier is after the acquisition of North America, right? Okay. That was the one where, and so two amazing things happened for us. One was that we formed this great partnership with Lennar, and we decided to do this thing together, really, which was, we acquired the 8th largest title and settlement company in the country from them, but we also, in the process, took on Lennar as our largest minority shareholder, right?
Right. I mean, it's you could not pull that. It's seller financed, I'm assuming, right? That transaction.
Yes. Well, it was seller financed, and it was also financed with some of our equity, and so. That was the first kind of shot across the bow. The second one was that, like, the refi market turned, in a direction that nobody expected. Like, just when you thought interest rates couldn't go any lower, they went significantly lower. And we started to get a lot of traction with very large national, like, centralized lenders, and a lot of people jumping on to the bandwagon to our approach. And then we started to expand our aperture, not just to focus on title insurance, but on the whole closing piece.
Could you see the rates not be as pegged to property values and just have, look, this is the kind of effort it takes. It's more of a transaction per transaction fee, as opposed to a $5 million home should be more expensive to do title on.
We would love to see rates be more, I would say generally we would love to see them be more intelligently designed to link to value. Mm-hmm. Where, the value of underwriting a highly complex purchase transaction for a home that hasn't changed hands in 100 years. It's almost like specialty underwriting, for a life insurer, right? Yeah. That transaction is complex, and it probably requires a lot of work. And by the way, that's not the majority of transactions, just to be clear.
You talk about instant underwriting and all that, but how instant is instant at this point?
It's so where we've released the instant underwriting functionality is on refinance transactions, which, to be clear, bulk of the market right now. It's like over 60% of transactions.
Yeah.
And that is, we can generate a clear to close commitment with all of the predictive components that we offer in less than a minute. And that's a process that has traditionally taken, depending on the market, it could take 2 to 3 days of duration.
I guess the difference is you're not actually checking each deed, right? You're using, what is the norm in general insurance? It is actuarial processes, right?
It's back to the theme of, like, look, are we doing something novel by applying probabilistic underwriting to real property information? Not particularly. I actually think that the technology that we developed to enable this, which we patented, is quite novel. Mm-hmm. But the concept of insurance being, a well-educated guess with capital behind it is something that property and casualty insurance, homeowners insurance, life insurance, car insurance, they've been using this for 100 years, right? Mm-hmm. It's just the title never worked that way. In your guys' own article back in 2016, I think you quoted someone as saying, hey, this is an industry that's about risk avoidance.
Yeah,
right?
There was an amazing quote in that one that said, it's like an umbrella on a sunny day. That's kind of where it was.
And then, but then at that same quote, they were like, it's like an umbrella on a sunny day, but it's just that 1% of time that you need it. Well, if you really only need something 1% of the time, then you should not need to put the same fixed cost against every policy.
What is the standard payout? Is it 4 to 5% at the moment?
I think it's actually less in the last few years. It's probably running 4%.
So for every $100 that you pay in premiums, the firms are paying out $4 or $5 or even less
in losses. And just, again, put it in perspective, homeowners insurance on a good year is usually, it's more like for every $100 of premium, it's like $50 to $70 of that premium is going to pay losses. Efficient insurance markets are ones where most of your premiums go to pay claims. You are paying for value. The value you get is being protected, and the protection is evident when claims are being paid. In the title industry, the industry has long made the case that the reason you're getting value is because you don't have claims. That just I don't know.
A lot of these established players, I'm thinking of AmTrust, First American, et cetera, they have a lot of political clout in a lot of these states. What sort of regulatory lobbying are you guys involved in?
Yeah, so lobbying is kind of a loaded term. It often implies that there's, you've got a lobbyist or you've got a lobbying firm. And by the way, lobbying has a place. Most of our efforts to date have been to just talk to regulators, right? So like when we got licensed as a new insurance carrier with a new method of underwriting title insurance, we went and talked to, I think I did in-person meetings with 15 or 20 insurance commissioners across the country. Mm-hmm. And again, by and large, I was quite encouraged by most of them have realized that like the world of insurtech has come to change many things for the better.
Let's talk Lennar, because I think one of the things that you guys, the approach that you took, you went the venture route as well, but one of the things that you did is go to one of the biggest home builders in the country and say, look, we want to partner with you, and they're deeply invested in your business. My question is, so now you started with title, but you've sort of evolved to take on more aspects of the residential closing process. Since you're tied up with the home builder like that, what other opportunities do you see in the future for you guys? Are you going to branch out into even more, aspects of the transaction?
For now, we're just focused on making sure that title and closing becomes seamless, simple, invisible in the background, and less expensive. And if we can do that well, I do think our partnership with Lennar offers us it offers us many, many special opportunities for us to solve new problems together. But the ones, certainly that are also still out there are appraisal, right? Yep. That's the other long pole in the tent in closing. And I probably should have mentioned it as one of those pain points in the closing. Right. Also, starting to think about building specialty closing products. Like, is there a new policy that could exist for new homes, new home built homes? Okay. Again, it's no secret in the industry that title insurance for newly built homes is also, somewhat redundant.
The ownership structure is right there, right? Like there's no...
And by the way, the home builder bought title insurance on the land they bought, right? Yeah. So they buy a big plot of land. They buy a policy that makes sure that they can do what they want with the land. They can subdivide it, they can build on it, they can do everything. So now really what you're insuring on a title policy, of which one needs to be generated and paid for every single home that now gets built on that subdivided land, all you're really paying for is what's the risk that home builder didn't pay their contractors, mm-hmm. right? Or they have outstanding HOA liens or code enforcement liens, or they messed up an easement or something. And most home builders, and certainly Lennar is the best example of this, are in the business of building homes professionally. And so the idea of generating new products in partnership with home builders, that's something we've discussed with Lennar and with some other home builders.
I guess, do they give you insight into into the way they're evolving as a company and what they're taking on? Are you part of those conversations at all?
Yes. And there's another thing I've been extremely impressed by with Lennar. And what they did with us was not an exception. It was part of several transactions that they have done in a calculated move to be able to focus inwardly on their core, which is building homes and investing in great technology and processes to get homes built, and then partnering with the most innovative external companies in their broader ecosystem to let those companies do the other stuff well. So for example, they did this transaction with us so that we could revolutionize title and closing and be the best title and closing platform with the benefit of their backing and partnership behind us. They did the same thing with Hippo, which is a homeowners insurance company, right? They sold to Hippo a captive residential homeowners insurance brokerage, somewhat similar to what they did with us, but it's much smaller. Yeah. And then they partnered with Hippo to start creating new products that they could start pushing out through their network of their mortgage arm and home building. They did the same thing with Blend, right? The point of sale system that's now being used by Lennar's mortgage operation to streamline and make more efficient the process of getting approved for a mortgage. They did the same thing with Open Door, right? Where they made a very large investment in a really, really, I thought, game-changing way where Lennar wants to make sure that they manage their end-to-end customer lifecycle. And they've got a lot of customers that are captive in their own homes, right? So
So let's get into the new money that you raised. $123 million. Greenspring led the round, but there's involvement from all the other investors as well. You've raised $229 million now, which is a fair chunk of money. What's this going into? I mean, how much can you invest in data science and all that? Like, where's this money being allocated?
It's mostly being allocated for R&D and for building out a new bespoke solution delivery layer. So what's fascinating about what we've done is because we've so dramatically changed the nature of underwriting and closing a transaction from a title perspective, we basically created new kinds of work. Like we now have a machine instant underwriting on an algorithm, the title insurance piece, which means that the work around closing changes, right? You have to interpret what the machine spits out in different ways. We have that same machine now doing fee calculation work. It basically changes the nature of the work that people are doing so that they can be more focused on relationship management and communications with loan officers, with realtors. But that requires a different skill set. It requires us to develop our own people internally. And so long story short, like a big chunk of this goes into R&D, hiring more data scientists, engineers, product managers to accelerate the features that are on a roadmap to make the whole transaction end-to-end digital instant. But also a fair amount of it is going to we've been staffing up pretty aggressively.
Right. Where are you guys at right now? What's the headcount like? Because I know when you did the Lennar transaction, you went from a few dozen people to suddenly you were the head of a massive company. And I wonder as an entrepreneur, the cultural challenges of that and how that came about are interesting to me.
Yeah, I think right now we've got probably about 1,100 people. And we have hired a good number of people in the last 3 or 4 months. I think we've hired close to 200 people just in the last couple months. And look, culturally, here's what I would say. I think we went into this combination with eyes wide open and also being excited about being able to combine the best of both parts of this new business together, right? Like there's a lot of legacy title knowledge and closing knowledge and local market expertise that North American brought with it, and data, by the way, too. That just, it completely obliterated a learning curve that we would have had on our own.
When you talk about, hiring relationship managers and all of that, one of the things that I think about is the old guard has always talked about this being a relationship-driven business, but that came, at least for them, with a lot of schmoozing, a lot of inducements, a lot of wine and dine and all the stuff that we've talked about. That sounds like it's not going to be your approach.
No. Here's how we think about relationship management. And this is really one of the most unfortunate misconceptions about the title industry, I think, that people should talk about. It is a relationship-driven business. I think a lot of the spotlight gets put on the people who are managing the relationships and customer acquisition. And the unsung heroes of this industry are people who have the title escrow officer. They're literally doing like 100 different things, right? And what we're trying to do is, of those 100 things that they do, 70 of them are the administrative, copying, pasting, putting information into a system, moving it along, sending an email, placing a phone call, whatever.
The stuff you can automate, most likely, right?
The thing is, they would rather spend 70% of their time on real relationship management. By the way, relationship management, the way that great enterprise software companies do it, with customer success groups, right? Reaching out to your end customer, figuring out how we can make the solution better. How can we make things happen faster with less friction? And so that's the transition that we're really trying to make over the next year or two. And with a lot of part of the investment that we're doing is like, we've staffed up an entirely new group of people in an operating unit in Southern California that didn't exist, 3 months ago. It's probably like 70 people now. And we're trying to get this focus on, and other industries have done this too, which is like, let's look at the core of what we want our service to be, right? We want it to be like a concierge at the Four Seasons, right? Somebody who's like so customer centric and can be, because their brand and their systems and their processes are like running well in the background. And so now it's not about schmoozing. It's not about like, which, by the way, in the state of California, you can't really do anyway.
Well, in the state of New York, you can't really do it either, but it happens.
It happens. It happens. It still happens.
And a lot of the way that a lot of these people get compensated is the other interesting part of it, right? Like a lot of them make their money in cash tips. And
yeah, which is
in your world, a lot of that is going to go away, which is going to create a lot of angst and uncertainty.
This process of tipping in New York, again, we don't operate there yet, so I'm sure I'm speaking ignorantly, although I will say that, I've been told often that I speak ignorantly in this industry, and then it turns out that the ignorant things I'm saying tend to become, better, more efficient ways of doing things. I don't understand, on top of the $1,000 of fees that you pay to close a transaction, why you would be expected to tip somebody, your closer. That one's baffling to me.
Yeah, you're gonna have a good time when you're in New York. You're gonna enjoy that. So one of the things you brought up, which I think is interesting, is this pandemic is kind of, I think your exact words were regulatory inertia. And this pandemic has kind of wiped out a lot of those arcane laws that were there, at least temporarily. But once it happens, I think people see the light and it's not going to go back. Like, my sense is digital notarization is probably here to stay, even once we can meet in person. What other sort of big shifts should we be mindful of that you're optimistic will come in from the law and policy side of things?
I mean, digital notarization, I'm hopeful that leads just to digital signature in general. Like, with the amount of fraud prevention tech that we have and identity authentication tech that we have, like, you'd like to think that over time we can get to a world where you can instantly sign docs and, and do that in less than the 45 minutes that it still takes, on a remote online notarization session. I do think you're going to see a lot of appraisal movement on appraisal regulation and instant appraisal acceptance that will be extremely beneficial. Just because with what's, I think, about to happen, like right now you're seeing a lot of volatility in the secondary mortgage market, which means that the volumes are still like in very kind of fit and starts, like, resale volumes are picking back up again, but refi volumes aren't going up as aggressive as they should in response to interest rate movement because a lot of lenders have tightened their credit standards. They don't even have the fulfillment capacity to fulfill demand. I think what you'll see is when that stuff gets smoothed out a bit, and as we get back to normal, I think the appraisal thing is going to be the next thing that you'll then see, because as there becomes a flood of demand, there just isn't the appraisal capacity with our network of licensed appraisers.
Right.
And with Fannie and Freddie, with their appraisal waiver programs that they instituted.
There's like
years back.
There's like a 90-day deferral on appraisals in certain places and things like that. How do you stay sort of excited in what you're doing? As you talked about, it is a product that you could look at it and be like, man, this is like just a maze of regulations. I don't want to do this. I don't want to deal with this. So how do you stay excited as a founder, as an entrepreneur, as a boss when you're dealing with such a product?
Yeah, I mean, the way I stay excited, honestly, is like, and this is maybe a, kind of a draconian way that I would think many founders stay excited, is like, the heart of the problem is the more excited I get, right? If you want to see me get excited about a problem and solve it, tell me it's impossible.